Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Wednesday, August 2nd, and then we'll see how things look for Thursday, August 3rd. We had a pretty significant down day. We have turned negative now in the short term, but we're almost oversold already. We're turning more negative in the intermediate term. The long term is still holding up for right now. If you're interested in looking at the different thumbnails that I've been using on the full-length videos, please go through, and if you have any feedback, feel free to give that to me. Over the weekend, I'm going to post all the thumbnails that I've used this past week and take a vote and see if anybody has any opinions about those. Let's go back and talk about what happened. First of all, stocks were Fitch slapped as interest rates rose in an overbought environment. The downgrading that we saw from Fitch, one of the big bond agencies, the market didn't really react to that too much until we opened on Wednesday. And then it's like they used that as an excuse for everything to shoot lower. That is really more of a catalyst in an overbought situation, and we took things really down from that point. We did have negative seasonality, and that did kick in on Wednesday. Europe was also weak, and that fed over into the weakness into the U.S. market. Mega caps and growth stocks, these have been doing well in 2023. They got really hit on Wednesday. Interest rates were lower overnight. They didn't really gyrate all over the place. But then as the cash market opened, interest rates went up, and that gave more reason for stocks to go down. The positive scenario that we had been dealing with is now thrown into check. They're going more now with what Fitch cited as a concern about future fiscal deterioration, growing government debt, and an erosion of governance. Now, you can take that a lot of different ways. We're just shifting things more negative, and we'll pick up and try to find out what the scenario is going forward. On a short-term basis, we have our stochastics that are extreme overbought. We're also showing them oversold on the same chart. In the intermediate term, we have the PMO studies and the BPI based on the S&P 500. The NASDAQ 100 has dropped. So it's only the bullish percent index for the S&P right now. On a long-term basis, the moving averages are still extreme, but they're starting to come down. Believe it or not, we have some short-term oversold indicators, our usual suspects, the Stoch RSI, the Williams Percent R, the CCI 14, and some stochastics are already extreme negative, as well as the Force Index. The dollar was up and interest rates were up, but they closed well off of their highs. Bonds really shot up. They came back down, but stocks still just kept going lower anyway. All of the yield curves that we follow still are inverted. Sentiment is positive. It dropped from being extreme positive. Now it's only positive at 67. Our trend is starting to weaken now. We've dropped below the moving average with the ADX. The green line's still on top, but it's going down too. Both of them are above 20, but we want to be careful because the red line's really coming up. Our bias is negative, and our momentum is mixed to negative. The economic reports that came out, we had the weekly MBA mortgage applications index. Overall, it was down 3%. Purchase applications as well as refinance applications were both down 3%. The ADP employment change, it was another catalyst for taking things lower. It came in a lot stronger than expected. They thought there were going to be 185,000 new jobs. There ended up being 324,000. Last time we saw 455,000. This is suggesting that the employment situation is strong and will give the Fed more reason to keep raising interest rates. Here's the intraday chart where we gap down all the way below S3. I don't have that on this software, so I had to draw these lines myself. We then fell down to S4, even below that. I don't have the software to calculate S5. We came down to about 45.06, and then we found a little bit of support coming up off of that, but we closed pretty much near the low. Growth versus value took a real hit for growth. We closed below the unchanged level, even though we tried to claw our way back going into the close. Here's the condition of our trend. The ADX is dropping below the moving average. It's still extreme, but the green line is really declining as the red line is coming up. Short-term chart, we're also still extreme, coming under the moving average, green line down, red line up. The daily chart, where we were never able to get up to the underside of this trend line, we've been coming down and we closed below this pivot point, so that support level did not hold. We were just about average as far as volume was concerned. Looking at the 20-period moving average, this is our first line of defense, so to speak. This is short-term, where we've come down to the 20-period moving average. Will this hold? Will we bounce up off of that, or are we going to keep falling down below it? Also, on a short-term basis, our Stochc RSI, which was just extreme positive a few days ago, has now gone extreme negative. The same thing with the Williams percent R. It shot down in one day. Looking at our stochastics, the short term are already extreme negative. We're negative in the intermediate term. We're still extreme positive in the long term, but starting to go lower. Looking at our double and triple 50-period exponential moving average, we did drop below the blue line, so that support level also did not hold. But when we look at the regular 50-period moving averages, we're still well above each of those. The parabolic SAR, this is an indicator I rely on heavily. We now have a dot on top, so that switched from positive to negative. Here's a new chart that I just decided to come up with, where I'm going from the October low to the March low, and then I send that trend line off into space. Then I go from the March low to the May low and send that off into space. I go from the May low to the July low and then send that off into space. We dropped below this first trend line. Are we going to come down and come to this next trend line, which right now is at about 44.50? We're coming into a new cycle. August 1st was the new cycle date. Is this going to produce a change in the market? It had been going up. Are we going to switch to start going down? This is also another new chart. It's not really telling us anything, but I just wanted to explain it. The blue line is the S&P equal weight ETF. The red line is the MOVE index inverted, and they have a tendency to go in the same overall direction. Just to show that on a graphical basis, I put a correlation down below. They are currently neutral right now. Sometimes they really correlate and go in the same direction. Other times they go in opposite directions. We're seeing if this chart will give us some insight. Another new chart is the Dow to transports ratio. When this ratio is going up, the Dow is outperforming. When it's going down, the transports are outperforming. Right now, the transports are outperforming the Dow. We're keeping an eye on that 61.8% retracement level on the NASDAQ. We didn't get down to it yet. The low was at 13,915. This line is at 13,874, so we're still a little bit below that with this fib level. If we continue to fall, we'll be watching this level more. The NASDAQ 100, it fell down below this pivot level, but it's still above the August 2022 highs. Are we going to be able to bounce back up, or are we going to keep falling back down? The NASDAQ 100 turning more negative as well. We saw this longer-term negative divergence between price and the PPO momentum oscillator. It started to show some improvement, but is now turning back more negative. Longer term with the S&P 500, we're right on this line right now. So we don't know if we're going to break back and go above it, or if we're going to break down and go below it. Seeing that same thing with the NASDAQ 100 weekly chart. We're right on the line. The ratio between the NASDAQ 100 and the Dow giving us a very high reading, ticking down just a little bit. Other times when that happened, that presented a lot of problems for the market. We're wondering, is that going to happen again this time? What's our outlook for Thursday? We do have a lot of influential earnings reports that will be released. This can include Apple, Amazon, Merck, and I understand Qualcomm reported after the close. There's no scheduled Fed speeches for the month of August. As far as our technicals, we're still positive in the background, but we're short-term negative and even a little bit oversold at this point. We're turning more negative in the intermediate term. We're wondering, is this going to last? Is this part of seasonality? We'll just have to see things as they go forward to answer those questions. The economic report's coming out on Thursday. We'll get the second quarter productivity as well as unit labor costs, the preliminary report. Weekly jobless claims as we get every week. The S&P Global U.S. Services PMI, the final reading. The big one's going to be the ISM Non-Manufacturing Index. And then we'll also get factory orders. Keeping an eye on geopolitical events, but as far as the stock market is concerned, it's all about interest rates right now. Here's the updated economic calendar for the week. Please note that on Friday, we will be getting the employment situation report. The Stock Traders Almanac statistics for August 3rd were kind of neutral. Where we're neutral to positive with the Dow and NASDAQ, we're neutral to negative with the S&P. Also keeping an eye on this for the NASDAQ. We're seeing that weakness that came in the latter part of July and into the early part of August. Is that going to continue? We will be on the third trading day of the month. The dashed lines are the pre-election years. We're also showing follow-through weakness during these times. So our scenarios. We could go more with the down one right now, but we're almost oversold, especially in the short term. but we're still positive in the background, and we're wondering, are we going to bounce from here? Was this just a phenomenon, or is this going to start something that's going to lead to a longer-term trend? It's hard to go with the up one right now because of the big down day that we had. The only thing that we know for sure right now is we're not going with the sideways trend. Even though the ADX is weakening, it's still up in that 40 area. It's dropping below its moving average, and the green line is still on top. The warning signs. Are we seeing this convergence of these short-term bearish signals that I've been trying to point out? Yes, it looks like they all came together and this is happening. Now we're wondering, are we done or are we going to continue? The longer-term trend signals may be signaling a top. We don't know right now. Both the S&P and NASDAQ 100 are sitting right on those lines. We're coming into a seasonally and historically weak time of the month. That still is going forward from here. The S&P oscillators have turned over negative. We're keeping an eye on the NASDAQ 100. It is also negative. The VIX is showing that there's not a lot of fear right now, even though it is starting to climb. The cumulative new highs, new lows for the NASDAQ, they are showing weakness. We're above the 3-month yield that we were at back in 2007, and we're still going up right now. The S&P 500 growth is weakening, but it's still in an uptrend. The weekly pivot point acted as overhead resistance. That was last week. We hit that, and we pretty much have been coming down ever since. The parabolic SAR has turned negative, and then we're dealing with earnings season on a case-by-case basis. The positive signs. We do have this positive seasonality and setups that remain further in the background. The daily special K chart is still positive. The longer-term equity put-call ratio is positive. The S&P remains above the downtrend channel upper line. We're still in a risk-on posture. Lower price levels may provide support. If we get to those levels, are they going to hold? The S&P is outperforming utilities. The NASDAQ and NASDAQ 100, they're above overhead resistance, but they're still below daily pivot resistance, and now they're starting to even break through that. Are these other support levels going to hold? The Staples to S&P 500 ratio is declining. The Russell and small cap index, as well as the mid caps, generated recent golden crosses. Small and mid cap growth continues to be positive. The Pring bottom fisher is still generating a buy signal. Our conclusion, the S&P, it's turning negative. Is this going to last? If so, how long do we think it will last? We can say the same in the short and intermediate term. The long term is still positive. The one caution I would give is in the short term, we're already oversold with a lot of our indicators. Be careful if you're going to try to short the market. We might get some kind of a bounce out of that. Thank you. I hope you found this helpful. Please feel free to check out the full-length video. Have a great day, and I will talk to you in the next video.